Hello, everyone. Welcome back to the Daily Gold podcast. Thank you so much for tuning in today. This interview is being recorded on Tuesday, August 6th, 2024. And with me is returning guest. He is Robert Sinn, also known as CEO Technician on Twitter and Goldfinger as well. Uh, Goldie, let's talk about a subject. I presume your favorite, my favorite as well, gold. And at the end of last year, I said you nailed it, talking about how gold was not yet in Nirvana, but that it would be in Nirvana soon. Maybe we're about to go into Nirvana, maybe we already have been. But those thoughts aside, Goldie, how are you looking at the market right this moment? And what are your general thoughts on the outlook from now until the rest of the year?
Well, Jordan, it's a pleasure to be back on, and I appreciate your invitation. I dressed up for the occasion, and it's not often that I put on a suit jacket, but for this special occasion, I have donned a suit jacket, and it feels good. It feels very formal. It feels like this is a special occasion. Yeah, so there's a lot of thoughts here, and the reason why I really wanted to speak to you today is because I wanted to make it clear to all of your viewers that they don't want to miss what's about to happen in my estimation. I think gold's having a little bit of volatility here the last couple of weeks. We went above 2,500 in the futures, then we dropped $100. It's moving around quite a bit. Some people are worried that this is a top. Um, I feel like this is the standard sort of volatility across markets. So it's not just gold. Obviously, there's a lot of volatility in multiple markets, including the VIX spiking to 65 that you see at the beginning of a big economic downturn or a confirmation that all is not well with the economy. The R word, which it seems the recession, although not confirmed by the economists, with both the Somme rule being confirmed and the twos, tens in the yield curve going steeper, where you actually have on Monday for a brief period of time, we had the yield on the 2 year fall lower than the yield on the 10 year. And that's after almost 2 years of inversion. That's a tried and true, sign of a recession. So I think you put it all together, put all the evidence, the recession is either here and it just hasn't been confirmed, or it's approaching very soon, right? And so I think this is the kind of gold volatility, price volatility that we get at the start of these things. If you think back to just two periods in the last 20 years that stand out to me, I mean, I'm 44, so they're the most prominent in my mind, and that was September, October 2008, and then March 2020. So, in September of 2008, we had Lehman Brothers. Gold was trading around 950 in that ballpark around that time. Within less than 2 months, it had dropped more than $200 an ounce. It bottomed, as you said offline, 695 in late 2008, and then it proceeded to rise quite sharply, and it was above $1,000 just a couple months later. That was a tremendous buying opportunity, but that was a shakeout due to margin calls and deleveraging at the during a crisis period, right? And March 2020, same thing. Gold had a tremendous amount of volatility February, March 2020, but then finally at the end of March 2020, it found its footing and began to rise sharply. Eventually, by August, it rose to above $2,000 an ounce. So I feel like we're in a similar period of time where you could have a couple of months of volatility, and those who aren't firm in their conviction of the gold bull market could get shaken out. And so my message here today to your viewers is don't get shaken out. There's higher prices still to come.
Okay, great. Are there any levels that you're looking at, or are you just kind of have the general thought that we're going to see a lot of volatility in the short term here, and that just wait for the volatility to subside, or for the Fed to cut, or for the market to kind of find its footing, the gold market that is. Can you add any more color to how you're thinking about, I mean, you don't have to give away your entire strategy, but just how you're thinking about positioning, or anything else?
Well, yeah, I mean, so I think it all depends upon your time frame. So are you a long-term investor? Are you a trader? If you're a trader, well, it's a totally different. But if you're a long-term investor, I think if we do get a further shakeout in gold, maybe down to 2360, there's pretty big support down around that level. I think that's a buying opportunity. And when we spoke last time, I told you my upside, my 12-month target's about 2,700. I'm sticking with that, but obviously we're further in the time scale. I think gold has a pretty good shot of reaching 2,700 by the end of the year. At risk of putting my foot in my mouth here on camera, I think there's a very good possibility of that, and still higher prices in 2025. So if we do get a further dip, maybe down to 2360 or maybe even a little lower, I think that's a tremendous buying opportunity. I wouldn't get worried from a technical standpoint until gold made a weekly close lower than 2300, and really probably lower than 2280. If that happens, then I would have to really, reconsider what's going on. Is there something off with my fundamental view of things? Maybe the world change if that happens. But at this point in time, everything I'm seeing is the Fed pivot is at hand, and a lot of central banks are pivoting. There's going to be a lot of easing here in the second half of 2024. And there's a pretty good possibility that the Fed will start up sort of a stealth version of QE in 2025.
Okay. Let's follow up on that. So stealth version of QE. Um, how stealth, and how do you see that playing out?
Well, so we have this huge debt in the US, right? The government debt's over 35 trillion. The unfunded liabilities are another, 75 trillion, or some gargantuan amount, right? Meanwhile, under Trump and Biden, we've been running massive deficits for the last 5 years. Trillion five, 2 trillion, COVID year, I don't know what it was, 7 trillion or something crazy. The deficits have been enormous, and they've not gotten smaller, even though we've supposedly been at full employment and had this really strong economy in 23 and 24. So what will happen to the deficit if the economy gets weaker? Um, every time we have a serious downturn, like in 2008, 2009, like in 2020, the deficits went up a lot, right? So we're already starting at a very high level of budget deficit. Well, if the economy gets weaker, it's only going to get bigger. And so that's going to force the Fed's hand in terms of helping the Treasury finance the government. And so I think you'll see they'll stop the QT here in September in 7 weeks. And then there'll be a stealth form of QE where basically the balance sheet doesn't get smaller. Uh, Instead of allowing it to run off, they're going to reinvest some of that and basically put it into the long end of the curve. So they'll buy 20s, they'll buy 30s, they'll buy 10s, and they'll basically start to push down on the interest rate at the long end of the yield curve. So I think that's how it will start. It won't be like a big announcement, we're doing quantitative easing. It'll be kind of stealth. But if the recession gets worse as 2025 evolves, I expect that they will eventually do a formal quantitative easing, and actually quite will quite it will they'll substantially add to the balance sheet, and they won't be able to hide it, right? And so if we think back to when the Fed uh, did quantitative easing the first time in 2009, 2010, and 2011, it was extremely bullish for precious metals. Um, and so I think we're in for a similar sort of tailwind where the Fed was relatively tight in 2006, and they helped the housing market to roll over at the start of the financial crisis. Well, here we are in 2024. So I would say that it's very it's a close analog to 2006 in some ways, at least in terms of gold, right? And the Fed started to ease in 2007 and ease aggressively in 2008. And so I feel that those are the kind of tailwinds that we have here over the next few years for gold. Call me crazy, but that's how I see it.
Yeah, let me follow up about long-term interest rates because we know that, or at least we can think, in the last couple of years, it appears that the bond market broke. There, at least by my view, bonds are in a new secular bear. However, certainly in a recession and downturn, bonds can have a big rally. So for me, that's something I'm not really sure yet as far as what happens with long-term interest rates. They're obviously declining now with short-term rates, but do long-term interest rates stay down when the Fed starts cutting aggressively? Um, Obviously, you mentioned QE, so that'll help keep rates lower. But I'm just wondering, do you see significant upside pressure on long-term rates, or maybe, a medium amount of pressure? I know it's hard to predict, but for me, that's kind of an interesting thought process uh, because we know that long-term rates, I mean, they feed into, mortgages and many things else. And
Mhm.
so I'm just wondering because some people have pointed out, if the Fed cuts and their long-term interest rates or long-term bonds get sold and long-term rates are really moving higher as the Fed is easing, that would be super, super bullish for gold. So give me your thoughts on, I know you already mentioned QE, but I'm curious if you can add anything else to your view on how long-term rates could play out during the recession.
Yeah, I mean, so you're right. We've had a big move lower just in the last month in the 10-year. I mean, if you think about it, the 10-year was about 4.5% just a month ago. It reached like 3.68% yield yesterday. So that's already a gigantic move at the long end of the curve. But I feel it's complicated because you're right. There's multiple cycles in play here. So I think the longer cycle is bond bear market, right? But I think that we're now in a cyclical bond bull. If you can have those two concepts in your head, I think that the shorter term cycle as the economy decelerates is bonds have a tailwind to them, bond prices and bond yields have a headwind. The 10-year, obviously these are very hard things to forecast, but I could see the 10-year yield falling as low as 3% by the end of 2025. I would say that's sort of like my my probably downside long-term target on the yield. I would be surprised if we fell below 3% on the 10-year, even a couple of years from now, I would be surprised because that would sort of fly in the face of that bond bear market cycle theory. But again, we can be wrong about these things. But basically, I think the yield curve steepens, right? So the Fed is going to drop the Fed funds rate 200 basis points by the end of next year. So they're going to really pressure the short end down. And the long end just kind of might stay in that 3.5 to 4% range, right? And if the vigilantes start to sell the long end of the curve, then the Fed will just come in and put the bid in at a certain level. It might be 4% on the 10-year, it might be 4.2% on the 10-year, but they will definitely cap it at some level. And that's where I see the quantitative easing. That's where I see they will monetize, the debt. And that's where I see, the turbo bid into gold coming from. Yeah.
Right. Turbo Nirvana. Yeah,
Turbo Nirvana. Yeah,
I
yeah.
think that's
Which I think we're really close to. So the last time we spoke, it was a little farther away. I think that it could kick in here at the end of 2024.
yeah. No, I don't disagree with you. I think as you're saying, yeah, the macro is really setting up for gold with big rate cuts coming. Um, okay, what does that mean for silver? Because we see in the last couple weeks, silver has just really been underperforming gold. So I mean that's the question now. I mean, we can just look at gold in a vacuum and say the Fed's going to be cutting aggressively, real rates are going to move lower. Likely it's going up, maybe not immediately. So the harder question is what happens to silver? I mean, does silver, because typically a recession is not good for silver. So there's all these, there's different factors that could affect it. So that's why I'm asking you. Give me your
Yeah.
thought. Give me your take on silver.
Silver is a tricky one, Jordan, and I think you're right. The recession is not good for silver. So silver has headwinds here in the near term. If I'm right in my assertion that the recession is at hand, as confirmed by the yield curve moves and the SOM rule and non-farm payrolls really dropping off in the last few months, and a multitude of other factors that point to the same thing, then yeah, silver has headwinds in the near term. But I just look back to history, and so what that tells me is once the recession is confirmed, the Fed has capitulated and really acknowledged that they're going to be cutting rates quite a bit, and they stop quantitative tightening. Basically, once the financial environment eases substantially, which could happen in the next 3 or 4 months, silver should bottom and it should start to turn up again. But obviously, with silver, there's a big industrial side of the bid into silver, right? And so that's problematic in the near term as the economy softens further. But I think if we think back to the end of 2009 and early 2010, so silver bottom began to turn up even as the economy was fairly soft because it had already priced in that softness, and central banks were super easy, uh, and silver rose, right? And so I think we could see a similar path over the next year where silver has some headwinds, let's say in the next few months, but then it will turn the corner and it could have a terrific rise. I mean, it could have a 2 or 3x rise to what gold does. If gold goes up 20%, silver could go up like 50% or 70%.
Now
It
you're
could
now
have
you're
an
now you're talking my language.
yeah, yeah. So let's say silver, big
and
support in silver around 26.
and let me
No,
just cut it. I'm sorry to stop your train of thought for a second time, but I pulled up silver, Goldie. What's interesting is I mean we're talking about it. Maybe it struggles for a couple months, but it's already declined from the high 32s down to 26. So I mean we've already seen markets, as they always discount things in advance, and so that's kind of because I'm thinking, okay, well, silver might be dead for a little while, but it's already come off. It's already gone from 32 to 26.
yeah, you nailed it. Yeah, you nailed it. So silver's ahead of the recession, and yeah, I mean, I would buy silver hand over fist at $26 now. So I mean, if we actually nail that, sentiment got really negative again, which could happen here in August. It could literally happen in the next few weeks. I would buy that at 26 hand over fist. Um, and again, at risk of putting my foot in my mouth here on video, I'll buy it at 26, and I would say it will reach 35 first. So it won't hit 20 first, it will hit 35 first.
Yeah. All right. Let's go one further than silver. How about the gold stocks and the juniors?
Mm. This is a really hard one. Because as bullish as I would want to be, early in a recession is the wrong time to own the juniors. But as you said, markets are forward looking and they got ahead of things. So the juniors have been falling for the last 2.5 months, and it's already really ugly. So it's just a matter of how bad does it have to get, and that's always really hard to gauge. It's like it's very hard to tell the difference, between a falling knife and a bottom, right? And with the juniors, it always feels like at the bottom it's a falling knife. It sort of feels like it's a falling knife now. Um, it's a really tough call here, but I think my simple answer to avoid making a call on it is just to say pick the stocks. So focus on the individual companies, how much cash they have, how much confidence you have in management, quality of assets, catalysts, and management's track record and ability to finance. I mean, like that's it. So I'll avoid the question by saying do your DD on the companies themselves.
No, I've been deferring to that quite a bit in the last year. No, I think you're absolutely right. I mean, you got to focus on the companies and be focus on the companies because you're going to become more of an expert on that than the macro, which even economists get wrong. Everybody thinks they can predict macro, but I mean, it's extremely difficult. But with that being
It's impossible.
But with that being said, I think it's fair to say, and I agree with you, and as you have been saying, um, the Fed is going to have to ease. It's very likely a recession is coming. That's good for gold. That's good for precious metals. And I think that's, you don't want to chase anything. Use volatility to your advantage. Um, I don't know. I guess I'm thinking of my playbook and reading into your what you're saying here
Never
today.
chase breakouts of precious metals. That's a rule. Can we talk about Costco?
Yeah, absolutely. We could talk about anything you'd like.
So this is a question. Why is Costco having these massive gold sales? Like why is Costco, like suddenly turned into the place to buy gold? You have any thoughts on that?
I really don't. Nor, I am not a man of few words, but in this case, I I really don't. I don't know. Maybe the average person or average family who shops at Costco, you buy everything at Costco. So, maybe
Well, what is
they
Costco, known for? It's known for the lowest price, right? And you're going to get the lowest price, and the brand is so big, the corporate name is so well known and respected that if you buy gold at Costco, you're not getting ripped off. You're actually getting real gold. And the problem with gold bullion buying throughout the last 50 years is you normally have to go to a pawn shop or some coin dealer. He's marked it up 10%, 12% above spot. Sometimes he screws you. The coin you get isn't that good. Um, there's lots of there's lots of issues with being an investor buying bullion, right? Well, Costco
yeah.
solved that because they're like, we've got this 1 ounce bar. It's a Pamp Suisse. It's quality. We vouch for it, and we're giving it to you at the lowest price you could possibly find it anywhere, and it's sealed, right? So they've solved the investor problem of buying small amounts of gold, of physical gold. And I don't view the Costco gold sales as a bearish indicator or a sign of a top. Actually, quite the opposite. I think that's the more widespread participation you see during the earlier stages of a bull market, and it's raising the awareness of the populace, the broader population of gold as an investment. So I think Costco has done us a huge service, not only by having the lowest possible price and a quality product, but they've raised people's awareness of gold as an investment. You don't need to be a millionaire or billionaire to invest in gold. You could be a regular person who makes $60,000 a year, and you can put a little bit of your savings into a gold coin that you get at Costco. So I actually, until we see people stampeding over themselves at football stadiums to buy gold, I don't think it's a sign of a top that Costco has basically cornered this gold market in the U.S.
Yeah, very interesting, and it's a good thing I don't have bullion dealers as sponsors. Otherwise, we would have had to cut out that segment, which you're only going to hear. You're only going to hear on the Daily Gold podcast, because I don't know if you can say that on other gold
I don't
podcasts,
think
because
you
yeah,
can.
yeah. But that no, that's a very. What's the lowest increment of gold that you could get at Costco? Do you
I
know?
think I think they've sold 1/10 ounce coins before. So, like the 1/10 ounce, which usually would spots 2,400. They probably sell it for like 270 or 280.
Okay, yeah, yeah, then I mean that's a great way for people to start stacking, as they say.
Yeah, and they
Uh
sell silver too. I saw a 10 ounce silver bar. So
and so what kind of premiums are we looking at?
I think that if you get the 1 ounce gold, we're looking at about a 2% premium, which is incredible considering that pretty much any bullion dealer, like local guy, is going to market at 4 or 5%. If it's an American Eagle, or it's a good brand, they're going to mark it up quite a bit. So you get the Pamp Suisse, 1 ounce gold bar sealed for a 2% over spot.
Is there a limit to how much a person can buy at
Yes,
Costco?
I think they cap you at five per trip, or five per month or something. Yeah, yeah. There's a limit. So that's the negative on it, is if you want to invest more than $10,000 at a time, then you're probably not going to Costco.
Yeah. Hey, but still, you're picking up your essentials. Got to pick up some real money with
Hey,
that and to protect yourself.
$10,000. That's a pretty good gold buy. I mean, I'd be fine buying 10,000 every couple months.
And yeah, not to do a segue, but is this another reason why precious metals are better than crypto? I mean, how could you acquire crypto at Costco? Like if they were going to sell that, I mean, how the hell would they do that exactly?
Bitcoin, ATM machine, which
Yeah.
has egregious markup. So that's a whole nother story. But don't get your Bitcoin at a Bitcoin ATM because you get ripped off.
Okay. Um, okay, last thing. Let's talk about the stock market. I mean, do you see this? I mean, do you see this being the start of a bear market in the stock market, or is this just going to be a big correction before, another move higher?
My bias my bias as a gold bull wants to say yes, it's the start of a bear market, but my technical analysis hat says no. The accumulation of the evidence is no, it's not a bear market in the U.S. stock market. It's not the start of a bear market. It might be a 15 to 20% hit that hurts really bad and scares the hell out of a lot of people, but I don't think it's going to be an official bear market. Um, yeah, I mean, I that it and look, a lot of it has to do with, obviously, the unknowable, which is how deep is this economic downturn going to be? And if it does turn into like a 2008 kind of downturn, then of course it's going to be a bear market, and I could come back and say that in hindsight. But right now, based upon what we know today, I think the Fed has a lot of ammunition in its gun here with the Fed funds at 5.5. I mean, they could cut 150 basis points by year end and really front load this thing, and really get I don't know if I think they're late with the first cut, but they could catch up quickly. Um, and yeah, there's parts of the economy that are still humming along, while the manufacturing side of it is pretty weak. The housing side is really starting to roll over now. But if the Fed gets proactive here and really front loads this thing, I think they can save it, right? And so usually the stock market is not going to drop more than 20% with this kind of easing coming down the pipe, unless, of course, it is a 2008, 2009 kind of thing. I mean, you think back like 2018, we had a pretty sharp drop. I think at the bottom, it reached almost 20%, but then Powell pivoted and sort of saved it at the last second. 2020 was very violent, but very short-lived. The Fed gave it everything it had and saved the market, and then sent it to new highs. I feel like it's possible we could see a 20% drop from the high, but I don't think it's going to be a longer term bear market.
Okay. Goldie, we've covered a lot here. Is there anything else you want to discuss that we haven't mentioned already?
Well, I think another thing is, we sit over here in the U.S. and we kind of see the world from our side, but I think it's also important to talk about the fact that China is continuing to accumulate gold. I know they didn't buy in May and June, supposedly, but I think there's a stealth accumulation that's still going on there. So is India, so is Turkey, so are countries like Poland. So central banks continue to diversify their reserves into gold. And People's Bank of China, their major policy advisor, he literally said, we need to increase the stimulus both on the monetary and fiscal side. They don't want to turn Japanese and be stuck in a low inflation trap. So China,
God, low inflation. I mean, that would be awful for your citizens. I mean, what a problem. Low inflation is too low. I mean, I'm sorry.
But it's fine. It's fine for us. It's gold bugs, Jordan. So China's supportive of gold too. So it's this all these tailwinds, right? So if we get a drop down to 2360, it's going to be a gift, in my opinion.
Yeah, you know what? I think you'll be right about that. I don't have a crystal ball. That's just my guess. I think you'll be right about that. Goldie, before I let you go, please tell our listeners where they can go to follow your work and how they can subscribe to your services.
Yeah, thank you, Jordan. So just find me on YouTube, Goldfinger Capital. Find me on Substack, Goldfinger Capital. Find me on CEO.ca at Goldfinger, and X, CEO Technician. That's it. You pretty much got all my stuff if you got those 4 places.
All right, buddy. Great job. Really appreciate you coming on. And when gold starts rocking and roaring again, we'll have to talk about our favorite grunge bands.
All right, I'll see you in Vancouver in September. We can talk football too.
Awesome. Thanks, Goldie.
Cheers.
Thank you for tuning in to the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.